So, did you enjoy the bull run? Still waiting for it. Is it still coming? Well, the answer might depend on the state of your portfolio right now, but we have to deal with the cold hard facts because the market doesn't give a shit whether you're up or you're down or your price targets got hit or whatever. Market's pretty damn merciless and cold. So today we're going to look at the only evidence that we need to in order to assess whether the Bitcoin bull run is truly over or not. And I know what you're thinking, but look at the charts this week. We just had a nice pump, internet man. But depending on how you see things, this is either the start of a new rally, we're so back, baby, or this is the bear trap before the next big crash, the relief rally before we go to zero. So first, what does the end of the bull run actually mean? Well, one problem with the discussion in crypto is that in past cycles, this meant the end of the bull run would lead to an absolute catastrophe with everything going down 90%, most things going down 99.9%. We didn't just slide from bull to bear. Instead, it seemed like the entire industry collapsed and as an existential crisis every time. Platforms imploded, investors got rugged, CEOs go to jail. It's crypto, man. Bear markets are always brought on with a full-blown Terminator style, just nuclear winter. But the thing is, that was then, this is now. Crypto's changing. Bitcoin is now a major macro global asset. The 4-year cycles are losing their potency to some extent. We're really following along the stock markets and US economy and all that stuff. So when we talk about a bear market for Bitcoin, it no longer has to mean everything comes crashing down in the same way they did before. After all, one of the biggest BTC vehicles in the world is the DEBIT ETF from BlackRock. And Larry Fink, the CEO of BlackRock, isn't about to go full SBF and bring the BlackRock empire down just so he can rug a few $billion in Bitcoin. So the end of the bull could mean something a little less severe this time, like a bearish period with lots of sideways chop for some months before recovery happens. Maybe it don't last 6 to 12 months before we take off again. In fact, that's exactly what Key Young Ju of the very well-respected research firm CryptoQuant has recently predicted. So let's take a look at his reasons to be bearish, which are actually in a weird way kind of bullish because there's only 6 months of down chop consolidation. I'm good, man. Let's go. First of all, and this really is critical for the markets, there's a lack of liquidity right now. Huge inflows decline from 150 billion to like $3 billion recently. Realized cap indicators, all kind of stuff, all point to a lack of new capital entering in the market, while large volumes at $100,000 didn't take prices any higher. There's too many sellers. And we saw also the ETFs with some negative flows for 5 straight weeks. Now we did have inflows last week, so there's a counter to that. 12% ETF drawdown, so there was a lot of selling pressure, more so than buyers could soak up. And without fresh liquidity, that means downward price action. And also, this being Bitcoin, we need to take into account whale games with the material indicators account showing that there have been huge amounts of spoof orders holding the price down. But while CryptoQuant pointed to increased whale inflows to exchanges, that could also preempt more selling pressure. And backing that up, we also have the suggestion of newer whales selling and OG holders moving coins as people panic and think the end could be near. Of course, none of this is 100% indicative of more price drops to come, but if we are in a bear trend, we need to think about, of course, the key levels for BTC in a downtrend. You might have months more chop. It's always a possibility, especially if this guy's right. Now, there are price points where we might find lower support for a horizontal range here on Bitcoin, where you may want to be shopping around for BTC and other coins if those levels get hit, if this guy is right. Or you can just be dollar cost averaging into your decent tokens, just waiting for the market recovery, which might only be 6 to 12 months away in this theory, especially because it seems very unlikely that we're looking at a worst case scenario, total price collapse, because we're so linked to equity markets now. But however you play it, we first have to get to the support zone of 75 to 78K, which is where we bounced already. You can see on the chart that the top of Bitcoin's previous range was there before it broke out last November. Price was around $73,000. We retested that range recently. After that, $60,000 may be a critical lower support level. And in the first half of 2024, this is where the realized price for new whales was established. A level reinforced also by initial institutional inflows through the Bitcoin ETF products, while the bottoms of Bitcoin's previous range lies at around $54,000. Ultimately, macro under the Trump admin is more important than ever. So it's likely that any hint of improvement on that front will act as the signal for liquidity to return. And that in mind, there are also some pretty bullish counter signals, right? This is just one guy's opinion that it's all over for the next 6 to 12 months, but there are some interesting counter indicators that we need to discuss. But before we talk about that, guys, if you're trading these cryptocurrency markets, you want to long the bounces, short the rejections, buy the hotspot altcoins when they come out. You got to check out what the guys who are BitUnix are doing. They've got a crazy deal on right now as well. But before we get into that, just you need to know what BitUnix is. This is one of the exchanges where you can long and short all the big coins in the market. So look, whether you want to trade Bitcoin, Ethereum, Solana, Dogecoin, whatever, they got you covered. And no KYC, no VPN, no bullshit. Basically click the link down below and you're in. And you can start trading. Doesn't matter where you are in the world, you can use it. Okay? Go check it out. It's a great exchange. I've been using it for a lot of my trading recently. They have great liquidity, large range of coins you can trade. And when you use that link down below, exclusively, you're going to get all kinds of cool bonuses, including a $10 sign-up bonus. You can use as free money to try out the exchange. 20% deposit bonus, meaning you'll get $200 back if you put in $1,000, and up to $2,000 in trading bonuses. So go check it out if you're a trader and looking for a great place to be doing your trading. Thank you very much. So there's plenty of bulls still out there and plenty of reasons to be bullish. There's several signals to support the bull case right now, in fact, and negate this bear case. After a prolonged negative period, the Bitcoin ETFs have actually been picking up sustained inflows recently, about $1 billion last week. See it inflows again. And on top of that, if we take a look at the charts, we can see there's been a really nice bounce off of the 50-week EMA, which is a great sign to see. It's acted as a very long-range support level for Bitcoin during this entire market cycle. And if this bounce is significant enough, which it has been recently, then we might have already found the lows. Sure, we could still go sideways for months on end, but it might mean that there isn't much room left to the downside. You can also see that the 200-day EMA has been acting as resistance in the near term on the daily. Price broke above it recently. Can it sustain? Let's see. You'll know by the time you watch this video. The picture starts to look very bullish, though, when Bitcoin starts regularly trading back above the 200-day EMA. Additionally, a metric called the take or buy sell ratio is showing recovery. This indicates increasing momentum and buyer demand. So again, a positive sign, although there's still a way to go. Then there's the correlation between Bitcoin and the stock markets, which is currently high, means that the stock market recovers on improved macro conditions as tariff fears lower, then crypto is likely to pick up too. Global M2, don't forget about the global M2, guys. It's pumping. We're going to catch up to it probably the end of April. The probability of a recession also, as calculated from the yield curve, has also dropped. In fact, the Fed now signaling a potential for a recession in 2025 is very low. There are also signals the Fed's going to be completely ending QT after their massive reduction in QT recently. Additionally, let's not forget that the amount of capital is currently sidelined and stablecoins, perhaps ready to move when sentiment changes adequately enough, is very high right now. The aggregate stablecoin market cap above $230 billion, I think, currently, and trending upwards as more money keeps flowing into the crypto market. So there's a lot of dry powder that can be deployed at an instant. So you might now be asking, which is it, Lark, bull or bear? Well, there's great arguments for both sides, okay? Actually, this cycle, in a weird way, just may not end up being so extreme in either direction compared to previous runs. The cycle could be really maturing. Crypto's grown up, guys. There's a strong case for a bearish period of some months, perhaps, but we've seen that that could be relatively short and shallow and involve more sideways chop than we've seen in previous bearish periods. On the other hand, all that sideline capital waiting to push prices higher when certainty returns, maybe after April 2nd and the tariff stuff's all finished, could get prices moving real fast. We have catalysts from the Bitcoin reserve, China potentially coming back, new major corporations rumored to be buying, global M2 pumping. Yes, the global M2, I mentioned it twice in the same video, and 50 other damn things going on that are bullish. So right at the moment, a cautious approach with a longer-term bullish bias might make good sense. And most importantly, keep this in mind, the upside opportunity for buying Bitcoin far outweighs the downside risk. What's the worst that's going to happen? You're going to buy today and it goes down 20, 30%. Okay, sure. But you buy today and you hold on and don't instantly, lettuce hand your Bitcoin. Where's it going to go in 10 years? $1 million. That's what you're looking at. Oh, but I could have bought for 10% cheaper. Well, yeah, maybe. But is it going to matter that much when it's $1 million? Probably not. But I know what you're thinking. Well, that's all great, Lark. I don't have any Bitcoin. I'm all in massive shit coins. Well, study Bitcoin. Look, I love shit coins. I do. I got all kinds of altcoins, man, meme coins, all kinds of bullshit. All right? But the cornerstone of my portfolio is, and always will be, in Bitcoin. And there's a reason for that. Long-term Bitcoin is the survivor. It's the one that gets the most adoption, the most attention, everything. And it's where most of my money is, in crypto. Okay? I love altcoins. They're great for flipping. They're great for big swing trades through a cycle and all that kind of stuff. But not many of them are great for long-term holding. Maybe that'll change. Maybe we'll see some of these networks really take off and become future Apples and Amazons and stuff. But that hasn't happened yet. Right now, we're going through a bit of a bearish period. You've noticed, you're here, you understand what's going on. That bearish period will not last forever. We have too many bullish catalysts coming in 2025. Maybe macro totally cucks us. I'm open to that possibility, but I remain bullish on these markets. Thanks for watching.